Japan is the talking point for those in the financial industry who need to suggest that printing money is good for an economy. However, it is clear that Japan is really the perfect example of the failure of QE. Flip back into the pages of history and find the dying Japanese banking system. The solution? Print lots of money and keep the banks alive like zombies. When things get worse, print money and buy government debt. When things get even worse, start buying shares of the stock market. When a global crisis hits and contagion begins to take hold, buy everything in the country in a desperate attempt to delay the inevitable. In all known history, printing money has never worked in the long term. You came here for the truth, so let me unveil that for you. Today, we will talk about, despite the fact that there is massive levels of QE, Japan's economy has gone over the cliff. Let's begin by talking about what is going on in Japan right now. Print money to buy stocks. The Bank of Japan's accelerating purchases of equity funds are seen as a driving force of the Tokyo share markets. They are printing money to prop up the stock markets. This is a public announcement, and they're doing so that people, real investors, don't pull out their money. But slowly but surely, real investors are pulling out their money. And that means the government has to step in to fill that void. And you could see this chart at the top, starting from 2013, and then towards today, and you can see that the asset purchase prices of the equity funds have gone up dramatically over the last little while. And the Tokyo stock price, of course, corresponding with that, the more that the central bank buys, the more the stock market will go up. It is a simple matter of fact. Let's look at this very simple for those who don't understand this, and I made it a very simple diagram in my book. The Federal Reserve, or let's say the Bank of Japan in this case, the central bank of that particular country, prints the money. They're the printing press. Well, now it's a digital equivalent, but let's just think about it like this for a second. Well, they print off all those bills and they send it over to the banks, the commercial banks, the banks that you walk into to deposit your money. And they make loans to you. And so we have this very simple explanation for it, but a lot of more complex business goes on behind the scenes. The central banks in recent years have gotten involved in some business they should never have been involved in the first place. Let's move on to this. Bank of Japan's ETF purchases raise liquidity concerns. So you're talking about a central bank actually buying up what ETFs are essentially similar to a mutual fund, which many average people would invest in, trying to put some savings aside and get some growth. And the ETFs are traded on the stock market. So it's a way for people to get into stocks, people to sort of get into mutual funds at the same time, making it easy on them. And what we've been seeing, though, is that they are a way for a central bank to prop up the stock market. And they can do that. They can do this forever. But look at Venezuela's stock market. Look at other stock markets, in fact, around the world. How when you experience inflation, when you experience an expansion of the money supply, you can have the stock market move up. But what about the dollars that those are measured in? What about the currency it's measured in? Are they going to be necessarily reflecting that? Of course. The Bank of Japan's massive purchases of ETFs, that's exchange-traded funds, Part of its monetary easing program could be, contributing to sharp stock price swings by draining liquidity from the market. When you play around, you're going to make a mess, and that's what's happening today, not just in Japan, but in most countries around the world. A helping hand. The Bank of Japan has bought ETFs on 143 days since April 4, 2011, mainly when the stock market has been down. You can read these numbers for yourself. All I wanted to say is that when you're buying them multiple times per week, and what would that say about the strength of the economy when they have to go in regularly to buy shares in order to keep it propped up? And it's not small amounts we're talking about here. And this apparently is supposed to be impossible if you read your economics textbooks. Japanese velocity of money, that's their M3, let's call it, and the central bank assets as a percentage of GDP. The velocity is moving downward. We need more and more velocity the way this system is set up. And the way it works is simply that we have currencies. It's a current. It needs to continue to move to really have value for the system that's been set up. Look at the Bank of Japan's asset prices. They're printing, but it's not real money. You can't print wealth. You cannot print actual, printing money to create jobs, to create growth. It doesn't work like that. This is one very, very good example of that. The incredible shrinking benefits of massive Japanese money printing. Every single year over year that there is money being printed, you're going to have a decline in the real value of the currency. The Bank of Japan's balance sheet, 144%. Is it going down? Is it going up? Well, in this case here, we can see the percentage change, and all I'm seeing for the balance sheets all across the world is an expansion, some more than others, but they're always consistently adding to their balance sheets. Where do the central banks get their money from? Well, I showed you the diagram at the beginning, and they simply print it up. You cannot create monopoly money and have a system that is simply designed to fail to have it sort of, let's call it, betraying that. It's going to fail. From my book, I talked about something, it's a simple concept that doesn't, really doesn't get discussed out there, and I don't understand why. There have been countless cases throughout history of countries trying to print money and use deficit spending to get out of their problems. Think about it. Think about how many times this has happened throughout history. Just the obvious example, Weimar Germany. In the long term, this has absolutely never worked. Why then do governments believe that somehow this time is different and that they would be successful at preventing a collapse? It's going to happen again. I don't know when it's going to happen. All I'm saying is that this doesn't look good for what they've set it up for. In Japan, real GDP and components, all I wanted to note is the real GDP. They're saying it's basically about the same. Well, that's not the real GDP. We have a decline, but they're not willing to admit that. Keep your eyes on the GDP numbers, not to know how the economy is doing, but just to have a laugh. Let's move on to this here. Both the US and Japan had profits rebound, but household incomes only rose in the US. No, it didn't. That's what's really funny about this. Household incomes didn't rise. Maybe for the richest of the rich, sure, but that's not what this is about. You have to know the difference between real indicators and the fake ones. And whenever they talk about household incomes rising, these are down decades low in real terms. So these kind of numbers are fictional. Okay, and last but not least here, a central bank's risk manipulation well explains the local tales. And what I wanted to get to, you can read the diagram and this paragraph here for yourself, but just to note the highlighted portion. Essentially, central banks, by unfairly inflating asset prices, have compressed risk like a spring to unfairly tight levels. Unfortunately, the market is aware the price of risk is not correct, but they can't fight it, and everyone is forced to crowd into the same trade. By manipulating markets, they have also reduced investors' inherent conviction by rendering fundamentals less relevant. What have I talked about all the time? We're supposed to have these fundamentals here, but they don't exist anymore. They've screwed everything up, and it's only getting worse. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, you will certainly find my book, The Money GPS, even more informative. You can actually flip through the pages of the book. If you go to Amazon, they have a look inside feature which allows you to flip through the pages of the book and see if you like it. Now, I want to add this exact same video to the Money GPS eCourse. So I'm just going to do some slight editing and then post it up. As again, recently, I'll have to do this in the near future, maybe tomorrow, maybe the day after, or what have you. But I'd like to get that up again. So if you see the video, if you want to pop in just to give it a thumbs up, it will be the same content, so nothing new to see there. But I really want to create a lot of content for the eCourse specifically as well. So please stop by, just give it a thumbs up, and then you can move on from there. I'd really appreciate that very much. I want the eCourse to really take off, not for many people who are on here, because a lot of you are already aware of a lot of the eCourse type content that I do, but it's for those who aren't aware, and I could build a program for them. That's what I'm really trying to do here, and I really want to stress that you and I may know about what a bond is, for example, or what a share of the stock market is, but there are a large percentage of the people who are not aware. And as far as I'm aware, the educational system isn't helping anybody out in that regard. And then you turn to the mainstream media, and they're certainly not going to help anybody out. So what do people do? They go to the banks, they put their mutual funds, and they try to, think that they're sophisticated investors. No, you need a program. You need it to be free, and you need it to be available to the entire globe. That is my mission. That is my goal. And I'm really, really happy and honored to bring this information out. Take care.